And welcome to your trades the week ahead, and this week it was all about consolidation, sub 6700. That's also what we saw on Friday.
Lots of news, bank licenses, RBI policy, and we're on the cusp of yet another earnings season, so interesting times ahead.
Oh yes, and you saw a fair amount of profit taking as well set in. Like I said, for the week we managed to close in absolutely flat for both the Nifty as well as the Sensex, and it has been a sub 6700 tick, though you would have to say this trend only began towards the latter part of this week's trading session, that is on Thursday as well as the Friday. For the week, you've had real estate, which has been the top performer. In fact, the index managed to gain about almost 6.6%, with names like HDIL, DLF, etc. holding out very well. Capital goods saw profit taking. It was down over 1% this week, with BHEL cracking about almost 8%. JSPL was the top gainer. This managed to clock in gains of about almost 6.5%.
Lots of mid-caps in news. So the aviation stocks, for example, did exceptionally well this week. Jet, SpiceJet, etc. had fabulous gains the whole of this week. So it was good going for those stocks. Of course, the mid-cap pharma names like Wockhardt, etc. had a fabulous week too. And then real estate packed a punch this time around. So while the broader markets consolidated, real estate, HDIL, Unitech, etc. had a fabulous week. There were a few losers. Page Industries down 8%, HT Media down 8%. But those were few and far in between. I think on the broader markets, at least, with the 3.5–4% gain, the week belonged to the gainers. The question is, what do we do in the week ahead? It's the penultimate week before we hit the earnings season. Let's get in both our experts. Sandeep Wagle, founder and CEO of Power My Wealth, joins us on the show, as does Sahil Kapoor, Chief Technical Analyst at Edelweiss Securities. Gentlemen, thanks so much for joining in, both of you. Sandeep, what do you do with the Nifty and the Bank Nifty come next week?
Well, Neeraj, both of them are consolidating. I don't see a very clear pattern. Some kind of a correction, I would say yes. But if you term this as a weakness where it could fall down by 100–150 points, probably no. And I won't definitely go short in them. I would be looking out for lower levels to go long, if at all. And I think one has to be a stock and sector specific. You talked of a real estate, a lot of stocks are coming out. You will have some other stocks moving in the next week. So I think you'll have to choose your sector and stock well. There will be rotations, and one will follow the other. I mean, when this happens, you don't see a crackdown one way.
Well, the big event this week quite clearly was the RBI policy. That pretty much kick-started the day, or rather the week, I should say, in terms of the news flow. Status quo policy, but clearly the hawkish stance continues. Sahil, I want to get your views in on the banking pack. Of course, the bank license news aside, how would you approach the banking sector this week?
Banking stocks mostly had their fair share of consolidation this week. I think possibly another day or so of consolidation is possible, and we are approaching a week, possibly next 2 weeks. We are seeing that it will be a shortened trading sessions, so a shortened trading week because of a few holidays. So I think traders would want to be in positions when the week is open for trading. So I think Monday could be another consolidation session. But apart from that, I think the trend in Bank Nifty is clearly upwards, barring a jerk of say 100 and 150 points. I don't see that Bank Nifty can go down pretty much from here. So possibly, I think in April expiry, it should head towards 13,000 or even higher. So you should be approaching Bank Nifty from a constructive angle and looking at stocks from the private banking space. I think that should be the strategy. Look to buy strength rather than play weakness on Bank Nifty in April.
But Sandeep, I want to start off with IDFC. Started off the week very well, of course on the back of it getting an in-principle license, or rather nod for a banking license, and then you saw some profit taking as well setting in. How would you trade it come the week ahead?
Well, Aisha, it gave a very clear breakout at a level of 115, 116, and from there on it went up one way to almost 138, 139. We had talked of a target of 138, and we have advised booking profits in the range of 135, 138. Now, yes, the stock can definitely go back and test 138, 140. But once the event is over, I really don't think it makes sense to get back into that stock. If you've bought at 115, 117 and played for that 20 rupee move, you've got a 20% move in a span of just 10 days or something like that. I would definitely not be interested in getting it. May just consolidate. It may not fall. I think this stock will not break 115. It may not even break 135 in the next few weeks to come. And as a trader, I would not be that keen once the event is over playing for a bigger move in this stock, because it may not come so fast.
And Sahil, I want to get you in on the pharma pack. Action-packed week when it came to the news flow on most of these pharma majors. What is it that you like and dislike from the pharma sector?
See, on the whole, I think pharma sector is right now underperforming, and largely the move that we saw this week was in stocks which are still trending very strongly, like Oro Pharma, or possibly, we saw some movement in Wockhardt. But I think apart from Oro Pharma, we are not seeing any major stock which is in a very strong uptrend right now. Largely, most of the stocks are in a sideways, to a trending range, to a trading range. So I think largely the sector is sideways. I would not want to venture out a long trade in this sector apart from maybe an Oro Pharma, and possibly Natco. If it were to decline to levels of 720, 730, I think traders can look to buy that stock. It had become very heavy on the top, so I think this correction appears to be a good buying opportunity at lower levels of about 720, 730.
Sandeep, coming on, say, a Motherson Sumi, that stock has been the better performing mid caps the last few months, maybe at 254, 255. Is there a trade on the stock?
This stock has corrected from 275 down to 254, currently closed at that, and nearer 245, which is a 50% retracement of the prior swing move. I would be interested. 245 to 240, that would be the ideal buying range. With a stop loss of a little below 230, take that 12 rupees or 12, 14 rupees risk and play for a 285, 290 target as a position trade. And if you're talking of the next few months or so, 3 to 6 months, I think this stock could go beyond 315, 320, or maybe even 330 for that matter.
Sahil, the one other sector which was fairly active was clearly the realty space. I mean, one logic also could be the fact that, high beta and especially realty jumps in only at the last minute after the market rally. But then again, you had a, unique move in DLF, HTIL, be it Indiabulls Real Estate as well as Unitech and even IRB Infra for that matter. Anything that you're liking from an investment perspective, or does it seem like these were just trading bounces?
Largely, I think on real estate, we are still not very constructive from a trend perspective. Largely, these appear to be, as you said, trading bounces in most of these counters. Yes, but I think possibly a medium-term or a short-term trade or trend is possibly developing in HDIL, and I think that counter is possibly seeing a lot of volume and OI addition. So if I were to bet out of the real estate pack, largely I think another 10% move is very much likely in HDL from current levels. So the kind of build-up that we are seeing is only constructive in this counter. Apart from that, I think unless and until stocks like DLF are able to cross their recent highs, say 184, 185 for DLF, I think the trend for most of these counters will continue to be, very, very top heavy, and you are going to see supply at higher levels.
Sandeep, anything out of the sugar sector which is looking good for a trade?
Aisha, I'm not particularly happy the way things have closed, way most of the stocks have closed. They have not closed at the high of the day. So I would wait for the high of the week, that is Friday's high, to be crossed on Monday, and then I would take a call in a Renuka at 2350. If it breaks that, I would take a 1.5 rupee stop loss and play for a 3 rupees upside target, 26.50. I think the best stock in this space looks Renuka only. But it is very clearly a trading move. If it doesn't come in the next few days, one has to get out of that, or you can be trapped.
Sahil, what about the oil marketing companies, HP, BP, IOC, because they did show a bit of a perk up in Friday's session. Can it continue on Monday?
I think largely all the oil marketing companies are right now in kind of a dream run. I think the run that we are seeing possibly appears to be lasting in nature, at least for the next few sessions. I think HPCL is a clear bet. at 314, the kind of momentum that stock has, it can go up to about 325 to 327. So I would want to bet on HPCL on any declines towards 308 or 310. Put a stop loss below 302. So I think out of this pack, this stock looks promising. Otherwise, I think on intraday basis, these stocks are tradable once they approach the lows of the previous session. You can be constructive and start trading these stocks for very short-term gains.
Okay, time to get in some stock ideas then that you could execute coming the truncated week on Monday morning. Sandeep, you go first. What is it that you would recommend to our viewers?
Aisha, I would start with a buy in a BGR Energy, stop loss of 128, target of 153. The second call would be a buy in a IB Real Estate, India Bulls Real Estate, stop loss of 57, target of 69.
Interesting. Real estate, India Bulls Real Estate in particular. Thanks for that, Sandeep. And just coming to you, Sahil, what is it that you would recommend?
Largely, we are getting a little, constructive on metals. I think right now the trend is turning for a lot of these stocks. If I were to plot a copper to US 30-year bond ratio, or I would plot a crude minus 3 times copper ratio, everything is showing that possibly a short-term to medium-term bottom in metal prices is very, very near or possibly already established. And taking a cue from the chart patterns that is available in Tata Steel and Hindalco, I think metal stocks are going to give a fabulous rally in the April series. The rally is already taking shape, I think, in most of these stocks, but I would want to pick Tata Steel. From current levels of about 405, 404, the stock can rally up to 445, and a stop loss of 393 should suffice, looking at the price pattern forming in Tata Steel.
Anything else that you would want to recommend, Sahil?
Secondly, I think Siemens is another stock. We have seen that the capital goods sector has been one of the best performers last 3 years. If you were to rate it, it's the second most outperforming sector. And Siemens has a very strong chart. We've already seen fair amount of correction in the stock. So I think closer to 750, it's a very good buy with a stop loss at about 729 and target of 825.
Sahil, Sandeep, gentlemen, really appreciate you taking the time out and speaking with us today. That's it then on this edition of Your Trades. We'll catch you with all the trading action on Monday morning.